Awesome. We can probably go ahead and get started. We'll just start with some intros so people have some more time to trickle in if they're going to join. But hello, everybody. Thanks so much for joining us today. My name's Callie, and I'm a consultant with 3R. We can switch to that next slide. Thank you, Gina. I'll be monitoring the session today. So before jumping in, we'd just like to give a little bit of background on who we are. So 3R Sustainability is a full-service sustainability consulting firm that works with a variety of clients from different industries, helping them with a variety of services, including sustainability strategy and management systems, climate-related risk analysis and greenhouse gas measurement and target setting, energy audits, and of course, sustainability assurance services, or SAS, as we like to call it here. And we can switch to the next slide. So we offer multiple webinars throughout the year, and you can stay in loop with our upcoming webinars by joining our mailing list and or following us on LinkedIn. You can also scan the QR codes on this slide. All of our webinars are free to attend. Our upcoming webinar sessions are focused on CDP and really how to unlock the value behind that submission. And then in July, we're all excited to bring a webinar on double materiality, which I'm excited to be supporting as well. So last bit of housekeeping for today. Please be sure to utilize the chat feature and take advantage of the wonderful expertise that we have in this virtual room today. So we will leave some time at the end for questions, so you can pop those in the Q&A. And so now, for the moment we've all been waiting for, I want to hand it over to our fantastic panelists to introduce themselves. So Gina, could you kick us off?
Morning, Gina Macllwraith. I'm the Associate Director of Assurance, and I lead Sustainability Assurance Services. And as Callie said, we provide sustainability professionals conducting sustainability assurance. And I'm joined today by Edward.
Yeah, I am Edward Johnson. I work at Energy Vault. We are a energy storage solutions provider. So we sell energy storage solutions across short to ultra long duration. I joined Energy Vault just over 3 years ago when we went public, and have really been along for the entire sustainability journey of growing out the sustainability strategy of a publicly traded company. With that, we've published a handful of reports and have had 2 assured by SAS. So happy to share some perspective on that today.
Yeah, so take advantage of, as Callie said, we have experience in the room of people who have gone through this process. So today, some key takeaways. We're going to review the basics, start from we did a 101 webinar, Assurance 101 before this. I'm considering Assurance 201. Everybody is beginning to learn all of the different points associated with assurance. So we'll start with the basics, and then we will discover and discuss how assurance improves your assessment results, which Energy Vault did experience as part of their engagement with SAS. And then also how the value of data and report assurance can help you not just create the information and do the report, but also get that third-party verification and validation of your work. And then finally, we're going to spend most of our time walking through the assurance audit experience. So we brought Edward along to talk through the other side. I conducted the audit on their report, actually both of their reports. And so we want to take you through the process of just what this looks like, as most of you are likely thinking about what that is going to bring to you in the future, or have already gone through perhaps. So we'll just start off again with the basics, like we said. So most of the time you're getting sustainability assurance. The most common one is greenhouse gas emission inventories, and verifying your historic greenhouse gas emissions from a third-party verification. Also, what is termed non-financial sustainability data. So essentially any data point that is not a financial data point can be assured by a sustainability professional. And which is, again, the two that are most common. The one that people don't always recognize, or the ability, is actually to assure your full sustainability report. And that could be your annual report, or it can also be any other report or publication of any kind that includes sustainability information. And what we're going to talk about today is what that process looks like, and help you understand what it means when we say assuring a sustainability report. Some of the key aspects of why we're driving impact with assurance, there's regulatory compliance. So we've got California coming up next year, where they are looking for greenhouse gas assurance for companies greater than $1 billion in revenue. CSRD in Europe, which is in a process of looking for assurance there. There are regulatory requirements. Then there's often stakeholder requirements. Investors often are looking for that third-party assurance. And then disclosures, ratings, and sustainability statements. So EcoVadis allows you to get, you're not able to get 100 score on your reporting unless you've had third-party assurance. So that really helps those organizations that are looking to up the results there. CDP also has a full verification and assurance section where that increases your ratings and scores. And then finally, strategic certainty. I've done assurance for companies are doing their very first report, and they want that third-party review to be able to say it's not just us saying and what we're saying we're doing, but also having a third-party expert verify and assure that the work that's going into that report has been reviewed and is verified. Some of the common assurance standards, and I think this is where we often get a little bit confused, or can be confusing. So the ones you'll hear most are AA1000 and ISAE or ISSA. AA1000 is a sustainability practitioner assurance standard. That's the one that Sustainability Assurance Services use, and you have to be a licensed provider. Also, you need to be verified and certified through their process to complete the assurance engagement. And we'll talk more about what that involves, as that was the standard we used for this engagement. And the ISAE or ISSA, I won't get into the details, but that is the financial assurance standard for non-financial information. And so that typically is completed under the review of a certified public accountant, CPA, or a chartered accountant outside the US. And that is the standard used by the financial industry for non-financial information. The other standard that you will hear or be referenced is ISO 17029 or ISO 14065. That's actually a standard for verification and validation, specifically greenhouse gas emissions for 14065. And in that case, the organization is certified to those different standards to provide that verification. Each of those has a few different requirements, but generally looking at the same information. Some require a bit more documentation, some require less. There's a few variations, but each of those are the ones you're generally going to be looked at depending on who the provider is. There's different assurance levels. You've heard me talk about limited. That can also be called moderate in some cases. In this case, you're reviewing the data processes, a bit of the calculations. It's generally off-site, sometimes on-site, but generally off-site, virtual. And your assurance statement is going to be negatively worded, what we say, which means that nothing looks wrong. On the other part of that is what's called reasonable, or often can also be referred to as high. In this case, as an assurance provider, I am deeply looking at the full examination of the processes and calculations. It often includes going on site, doing physical verification of the processes and review. And in this case, it's positively worded. So I'm saying that the data is right. So there is the difference between the two as I'm looking on the limited is it looks like everything, nothing looks wrong. On the other, you're actually saying the data is right. And that is key. You can also tell by the difference in review is your reasonable engagement, your reasonable assurance level is going to take more time. And with that will be a higher budget requirement. These are all terms that generally you hear when we're going through assurance engagements. So got the background, the basics. Now let's get into the actual engagement that we are reviewing here. So let's see, this is where I'd like to bring Edward in. So we're going to be talking about the Energy Vault 2024 Sustainability Report Assurance. Kelly, I'm not sure if you can drop a link in the chat, but there is a hyperlink here if anybody wants to go to the Energy Vault site and take a look at the report. But that is there. 1 second here. Whoops. Everybody get to see my dog. I'm trying to find some notes here. Oops, that's not what you want. Stop sharing just for a second till I can pull up the right version here.
The chat is turned off for this meeting, unfortunately.
Oh, okay.
But
okay, no worries.
We will be sending this out later, so that link will be in there.
Going back to here. Right. Sorry, apologies for that, but I was trying not to get you guys all lost in my multiple screens here. So still going to get you lost, but we'll be there. So Edward, let's talk about this process and let's go through it. So talking high level here about the engagement process. Generally this, if everything's in order, will take approximately 2 to 8 weeks. With that said, I encourage you, if you are looking for, getting in the timeline or want to make sure you get everything involved, the sooner you can engage with your assurance provider, the better. As you can guess, with a lot of the new regulatory requirements and those things coming on, everybody is kind of starting to add, and there is a limited number of providers out there. So you definitely want to be engaging with your provider early so that you can get into the pipeline. But just know that once things are in line, it can move along relatively quickly. So the first part of the process is to do an engagement, figure out the scope of the engagement, and also, come up with a proposal and then sign what's called an engagement letter. So with that, Edward, when we talked about in our very first year of discussion, you guys came to us and were initially requesting social metrics only. But by the time we kind of got done talking about things, we decided to do a full report engagement. So what were the main drivers behind your decision to pursue full report assurance instead of just the social metrics verification?
Yeah. So I think we're definitely aware of the upcoming regulatory requirements, but our company is just a little too small for those really to matter yet. Really, the initial motivation was for raters and rankers, understanding how we could pick up a few extra points from having third-party assurance. We report every year to the S&P Global Corporate Sustainability Assessment, and that's one we pay close attention to. So that was the initial motivation. But I think once we started talking with Gina and the team there, we realized that it was a larger opportunity to look at the whole report. We're a sustainability team of two. We do a lot in-house. We're trying to be really smart with how we spend our limited budget. But to have an expert come in and look at our strategy, our methodologies, our data, and just to make sure everything was in line and wasn't wrong, as Gina said, that was just a great opportunity for us.
Excellent. So once we have the signed engagement letter, we do a kickoff meeting. We all meet and discuss the scope as you would expect, and start looking to complete the audit, which can include interviews, evidence gathering, as we said, data verification. So there's some different parts of the audit that can be completed as part of it. Depending on, the report, depending on what's being included in the scope. But from your perspective, what were you glad you did in preparation for the assurance? Then were there any surprises that it was a little bit different than you expected?
Yeah. So I really didn't know too much what it was going to look like going into it. I think I was expecting it to be really quantitative. So looking a lot at like Excel files, monthly tracking, GHG inventories. And there definitely was some of that, but there was actually a lot more of like looking at qualitative documents than I expected. So like internal PowerPoint decks from sustainability meetings or methodologies behind our materiality assessment. So it was a lot more like documenting or a lot more looking at the documentation of our sustainability strategy than I initially thought. Not that that was a bad thing, just different. Really, the most helpful thing for me was that we had like a clean internal folder structure. Something that was just like organized because Gina sent over that list of documents she was looking for. And it was really easy for me just to go back to like January, February, March and pull out the reports and the PowerPoints from different months. So got a little bit lucky there that I am an organized person, but it was definitely a huge time save when we started the process.
Excellent. So after this, I'll go through and I'll show you all a little bit more of what I look for in our audit. So we'll kind of talk more about the audit process. But now, once we go through all of that, we can prepare an audit report that includes findings and recommendations. One thing that's key about third-party independent assurance as opposed to consulting is we have findings and we can provide areas and opportunities for improvement. But what I do not provide is any how to close those gaps. So how were you able to, how did that initial process influence your understanding of materiality and what to include in your next report? Because that was some of the findings that we had in the first year and opportunities for improvement.
Yeah, definitely one of Gina's key findings was that we just had a ton of material topics, more than we needed. I think this was our second sustainability report. It was the first one we had gotten assured. I sort of felt like I wanted to report on everything I possibly could. I remember just going on the GRI website and scrolling through their disclosures and just finding any data point I think I could add into the report and thinking that would be valuable to add. But I think after talking with Gina and looking through this findings report, it was clear that we were just like reporting on some unnecessary data points. And not that that was wrong or incorrect, but just there was more value to really focus on what was important to the business. And I think in honing in on those and refining our report to focus on the sort of highly material topics, we were able to tell a better story in this year's report. I think it drives more attention to those really highly material key points. And sometimes we just were using extra disclosures that were unfortunately diluting some of those key data points. So again, not that anything was like wrong or incorrect, but it was something that Gina highlighted. And I think one of the biggest improvements we made to the report this year.
So With that, how did this process shape your reporting going forward? You just talked a little bit about on that and why you became a return customer.
Yeah, the findings report was something that was a little bit of a happy surprise at the end of it. At the end of this engagement with Gina, I think we really went in for the that stamp because that's what we were looking for. But ultimately, one of the most valuable pieces, probably the most valuable piece, was this findings report. Like I said before, we're a sustainability team of two. We have a lot on our plates, and we're really like hyper focused on our business. But to have someone come in from the outside and just give some perspective on how we have things set up, not saying that things are necessarily good or bad, but just from her experience, how our strategy is set up and how it might differ from some of the other companies she's seen was just a great exercise for us. I think it was just helpful to get someone to look at and step back and give us some perspective on our company and how we're operating sustainably. It gave us a bit of a roadmap to improve, and I think that's sort of the reason we came back to SAS is we got some suggestions, we were able to implement them, and we were very eager next year to see how Gina found those in the next report. So the assurance wasn't just like a check mark for us, but it was sort of a step and an opportunity to continue improving. So we did come back to Gina and her team, and I think that's something we will continue to do.
All right. So so have the meeting, and then the final step in the assurance process is the assurance statement. And that is actually the external point that is what's linked if you, in this case, doing a GRI report, disclosure. There's a disclosure if it's been externally assured, and you can link to that, and that's where you provide that external assurance of your information. That audit report is actually internal. So the audit findings, all of that is for the client to use, and then the assurance statement is the external facing document that's used as your evidence in your EcoVadis submission or CDP or to suppliers or investors or any of those. So the findings themselves are all internal and for your use only. So now I'm going to kind of retreat back a little bit and show you how we got to those results and use this year's report to show the improvements or I would say the updates that Edward just talked about based on our first report to this one. So as a summary, using the AA 1000 standard, we do have it is a global consulting and sustainability standards firm, and it really looks at overall thorough review of performance and advancement of responsible business practices. It is principles based, and the 4 principles that I'm looking to make improve or looking to review are the first, inclusivity. We're looking to ensure that all relevant perspectives of stakeholders are considered and that you're using that to come up with your responses. And then materiality, that the most relevant and significant topics and underlying drivers that are impacting the organization and stakeholders are identified and prioritized. Maybe that sounds a little bit familiar of one of the findings of that we're actually looking for reporting those things that are most significant so that your stakeholders are getting the information that they need. The next principle is responsiveness, that once you do find those topics, you are incorporating those into your communications and into your decision-making actions and performance. And then finally, impact. So really looking at monitoring, measuring, and looking at the evaluation of the effectiveness of how you're addressing those material topics. So looking at kind of a bit of a hypothetical walkthrough of the audit. So as I look at the report. This is the 2024 report, page 31 for Energy Vault. And in this case, I'm looking for inclusivity. So on the report, they talk about, clearly line up how they followed their materiality and stakeholder process. And so I see this, and then I look for evidence that demonstrates that what's reported here matches the, that's backing that up. So in this case, there was a materiality report that talked about this stakeholder engagement process. We also looked at the other ways that they get input from stakeholders, whether it's coming from investors or customers or suppliers. So looking at the information or all of the work that goes into this page. So when you read this page as a reviewer, you're recognizing that someone has not just put the words on the page, but you've got a third-party verification that the words on the page are accurate and verify and accurately represents the process that went through. So then as we get to the materiality, in this case, that was page 32 of the Energy Vault report. And this is where we are looking to see, did they look at, how do they prioritize, looking for the review process for how do you prioritize, how do you decide, anybody who's done materiality knows that these dots can move all over, and there's an art and a science, and confirming that the process that Energy Vault went through met the requirements. One of the things that I think is key in this standard is it does talk about that we're looking to take into account the evolving geopolitical, regulatory requirements, maturity of topics. And it really does look at the process of how you decide what your material topics are. And so looking behind the curtain, so to speak, on where they came to all this to verify that these were truly the material topics. Then we get into responsiveness, and I will say that page 35 of their report, I would say, is one of the best practices I've seen as a provider for assurance. And this was added in the 2024 report. But this clearly outlines transparently the material topics, the related impacts, how they're measuring against them, the different KPIs that match, the metrics tracking, the strategies that are being used to address the impacts. And so what I was looking for is the behind the scenes. So this is where, Edward talked about the governance meeting minutes, internal communications, looking at the target setting and all the target practice, the tracking process. And that is where we get into a bit more of the data tracking, and then looking at ensuring that there's resources, the competencies of those that are doing the work behind the scenes, and then also ensuring that stakeholder input is being addressed. And then finally, looking at the impact principle. And in this case, it's pages 40 through 56 is where Energy Vault discusses the impact of all their material topics. Looking here is two examples. And this is where we do get into more of the data collection, review, tracking. Energy Vault does use a software platform, so we spend time doing a screen share, Edward walking me through the process, and demonstrating how the data collection is tracked and how often it's reviewed, and ensuring and verifying that work. The key point of this that I really appreciate out of the AA1000 standard is that it is looking for how you're capturing and measuring actual and potential impacts, intended and unintended impacts, and also positive and negative impacts. I think ensuring that you have a comprehensive and balanced understanding One thing I really appreciate when I am looking in reports is that you really are, telling the full impact story. And sometimes that you have a positive, and then when you have a negative impact, being transparent with your audience as appropriate to talk about both, the positive and the negative impacts that you have. So that's the process that got us to all of those findings that we had the first year, and some of the improvements in the report that we saw the next year. So with that, getting kind of towards the end here, Edward, I had one more question for you, and this is one I'm really hoping that we do get some audience questions that Callie, you can pull up and bring to us. But you did mention a little bit, Edward, before, that you have a limited budget. So maybe as a smaller company, how did you weigh the cost of assurance against the value that you got out of it?
Yeah. So we definitely have a limited budget. We're a team of two at a small publicly traded company. We're pursuing profitability. We're not there yet. So we're always trying to be really smart about how we spend our money. And as I'm sure everyone on this call knows, there are just so many different sustainability services that are offered. And it's always a question of what we should try to do in-house, what we should teach ourselves how to do versus what we should sort of find someone to help us with. I think when we were initially publishing our CSR, we did get some quotes to help with the creation of our CSR. And it was just like our entire annual budget. So we were definitely surprised just how much money it costs to build out these reports. Ultimately, we found that if we did the groundwork on these reports and pursued assurance, we could sort of publish something we were really confident about and confident in without overspending. So everyone obviously needs to do their own cost benefit analysis, but for us, the value of creating the report ourselves and then seeking assurance was totally there, and it just helped us publish something that we were really confident about.
Thanks. All right, Callie, have we got any questions?
Yeah, well, first of all, thank you both. This has been super insightful. So I hope that our audience has found it insightful as well. And we do have some questions. One of them is, do we know what the assurance standards requirements will be for the California regulations, and will it require CARB certified verifiers?
That has not been communicated yet. Currently, it says that it is the information I've found so far is that right now it's saying limited assurance of scope 1 and 2 in 2026 to 2025 greenhouse gas inventories, and then adding scope 3 in 2027. That information related to what the requirements are is, if more direction comes, it will come later in the year. So we don't know the answer to that yet.
Yeah, also we have some questions rolling in. I realize we're starting to come up on time, so do feel free to email us if we don't have time to get to your questions today. But we do have some other questions. One of them is, did assurance highlight any skills or roles or other processes that you realized you needed internally?
So that goes to you, Edward.
Yeah, I believe that was for you.
Yeah, I don't know about any skills or processes, but I think like the main takeaway was just this more of a specific focus on highly material topics. And I think like in focusing in on that, we did change some things. For us, we're an energy storage company, so we're always sort of thinking about the company's contribution to the global energy transition. That's sort of like an overarching theme. And I think we were trying to understand what that could look like in different departments. So what does that look like for the commercial team versus the procurement team versus the IT team, and sort of building out a sustainability strategy for each department that sort of feeds into this overarching goal for the company. So that's what I'd sort of say.
Mhm. Awesome. So I think that this might be the last question that we have time for. This is probably oriented toward Gina, but it could be both of you. And it's, would you recommend starting with limited assurance before moving to reasonable assurance, and why or why not?
Interesting question. So I will tell you that the verification world will say that generally you start with reasonable and try to, you get everything right, and then you back off to limited once everything is in place. On the reverse of that, the reason why the regulations and everything does say go with limited first and then reasonable is limited is, I would say, baby steps, for lack of a better term, in that do limited and get your processes in place, especially with, the world we're in related to, scope 3, scope 1 and 2, everything is a lot of estimates, is a lot of, never quite sure. The world of specifically of sustainability assurance as opposed to financial assurance, where you've got dollars and cents and there's 100 years of accepted practice on how to come to those numbers. We're still in the Wild West here. So the limited assurance is generally the first step, both for budget reasons and also just for scope, and that, companies take that first step, get the immediate pieces in place, make sure you're on the right track, and then advancing to reasonable assurance, where you have someone go in and do that deep dive into your work. So unless you're being required to do it, generally you start with limited and then advance to reasonable if it's required. Some always stay at limited. So
Yeah, and what I'd also
question.
just add to that is we've done limited for 2 years now. I think, like Gina said, we're not required to do this. It's very voluntary for us right now, and it was just like it was baby steps. It was getting involved and starting this process for regulations that might come down the road, and it's still been really valuable for us.
Well, thank you both so much for sharing your knowledge and insight. I definitely found this really helpful for myself. That's all of the time we have for questions today.
I'll just add
yeah.
that, Callie, that hopefully if there are those who have if you've submitted any questions that we didn't get to, and hopefully names are associated, if we can reply, we will reply directly to you, if as much as we can identify your question with your name. So
Yes,
appreciate
absolutely.
those.
Yes, absolutely. I was going to say, if you have any remaining questions that come up after, do feel free to email us, and we're happy to answer those questions. But thank you everyone so much for attending today. And we will send out this PowerPoint, and then you have the link as well to see all of the other fantastic webinars that we offer as well. So thank you, everyone.
Thanks, Edward.
Hey, thank you so much, Edward, for joining us.
Yeah,
and Gina for sharing your expertise. All right. Bye, everyone.